So, Rana Gupta is with us. He's Senior Portfolio Manager and India Equity Specialist at Manulife Investment Management. Rana, great to have you with us here on the program. Good morning. Prashant here. Do you sense, amongst institutional investors, what's the mood like? Do you sense a lot of enthusiasm that there is, there are greater upsides that you can see, or is there more caution and more wonder at this stage, Rana? What are you seeing?
Well, if you're talking about the foreign investors as an institution, then in looking at the flows, I would say that much of them have been quite concerned on the valuation. But having said that, I think the domestic institutions continue to pour in money. I think as per our understanding, the domestic flows are running at about $100 billion per annum, with the supplies of equities much less. So put together, if you ask us, we think from a from a liquidity standpoint, from a fundamental standpoint, the market is on good wicket.
Okay, Rana, hi. Good to have you on the show. The market's on a good wicket, you say. So valuation's not much of a concern. I mean, where do you see pockets of opportunity in the market?
Sure, I think the valuation overall market, I think if you look at some of like the industrial stocks there, I think the valuations is an issue because they have had a fantastic run over last 1-2 years or so. But we do see pockets of opportunity. For example, I think let's look at the domestic consumption, a sector which has not done much. But within that, we see opportunity in sectors like telecom. We see opportunity in sectors like two-wheelers, tractors. Also, we see opportunity in real estate ancillary kind of industries. With the specter of rates coming down and hopefully liquidity improving, we also see opportunities in banks, large banks which suffered due to liquidity in the past. We also see opportunity in the smaller banks or the non-banks with a fixed asset book. We see opportunity there. Also, given the wealth creation in India, we continue to see opportunity in the wealth and asset management businesses.
Okay, all right. Hi, Rana. Good morning and good to see you. Tell us about this real estate ancillaries. What are the plays you're looking at? The tiles players? Is it the pipes players? Give us some clarity on that front. Which is the segment you're looking at?
So we are looking at the segments like the pipes, the cables, the switch gears, the lighting and all those segments. Because all those segments, we believe the organized sector has a definite edge and they can do better. The other sectors are good. I think overall volume growth will come back, but there is just too much of competition. And we would rather want a bit of less competition, a bit of more volume growth and pricing for the businesses that we like.
No, absolutely. And a point taken. Rana, any thoughts on real estate? The cycle continues, sales, etc. are strong, but at the margin, one is starting to hear more and more anecdotal stories, right? But it's a consumer sector, so anecdotes is an important part of the mix. There are a lot of speculative activity as well, and I think institutional brokers are also starting to talk about it, at least formally. I think there was a Kotak recently wrote a note about it. What's your sense? I mean, is it a bit of a concern, or things are looking rock solid? And that's a sector which is not just important for that space itself, but it supports so much else.
Oh, absolutely. Real estate is a very important sector that way, as we are all aware that the domestic capital formation is largely around real estate sector. Plays a very important role in that. Now, to your point on speculation, wherever the prices goes up with volumes and such a large sector, there is bound to be some speculative activity. But that does not mean that the sector does not have potential. In the sector, there's a lot of potential. Within the sector, we like residential as well as commercial property. What we like are the companies which has large land banks, and therefore they are not under pressure to sell, and they can we can choose their launching time and which pocket they want to launch. Of course, there is a theory in the market that the real estate companies should not hold land and launch as fast as they can. But given the speculative activity that comes with it, and given the price ups and downs come with it, we would like our companies to kind of have that a strong balance sheet and land, so holding power to launch whenever they would feel it gets the optimum, the optimum from that land.
Okay. Rana, what's your stance on IT? both large cap and mid cap. We were just discussing this with the guest earlier as well, because now in general, sector valuations at about 30 times perhaps are reaching, some would say, optimal levels. But would you be willing to add more? And with what lens are you looking at IT?
Look, I think in IT one has to be somewhat, bottom up, because the large companies in IT, they're basically, one is expecting the bottom line growth of 10, 11%, and they're trading at 25, 26 to 30 times. So they can give you compounding, but I'm not sure 10% compounding is something that the investors all will be happy with. But bottom up, we see opportunities. Bottom up, for example, let's think about, in the US, if the rate cuts were to come back, if the housing sales were to do good, there are IT companies bottom up that you can find, which are a lot of exposure to that area. And because of that, they suffered in last 1-2 years. So they can make a big comeback. So like that, you can find out bottom up IT companies who have suffered in the last 2 or 3 years because of exposure to mortgages and those areas, and they can make a big time comeback.
Rana, what about these new age themes? Many of them, people were throwing in the towel and suddenly they have become the flavor. Everyone wants to, look at them. Zomato at these prices, it was less than a fourth of what it is currently. But now everyone's talking about the big opportunity. Similarly, even Paytm, it's been a rank underperformer, but from the lows, it's up more than 60%. Anything you like in this space? You can maybe throw in an Ola Electric as well in there.
Look, I think, we like this space. I mean, to begin with, we wrote a note about a year back from now, where we highlighted the digitisation theme, and our subline for the theme is let the cash flow. What we understood at that point in time is that many of these companies, they have put in all the required investments, and thus they do not require a very strong top line growth for the operating leverage and cash flows to play out. And frankly, that's exactly what happened for most cases. And we are happy to see that play out. So the key for us is, if a company builds a platform, how can they add services on top of that platform without making further capital investment? So therefore, the incremental return should be quite high, and that compensates for all the investments that they have made before. So we like companies in the, let's say, in the food services, in the quick commerce area. We like, those kind of platforms.
I mean, and it's incredible, right? I mean, if you run around the world, these companies have not done well, most of these companies. But here in India, it's been a different story, especially things like Blinkit, etc. Now, of course, there is Zepto, which is also garnering a lot of attention. By the way, have you met the folks at Zepto, Rana?
Not yet.
That's a hottest new thing. I mean, we had, I think, the Motilal, the conference, and Motilal representatives telling us that, the most sought after session was the session with Zepto. It kind of sort of talks about what's happening in that space and the excitement around that one. It's something we'll watch. I just want to take a quick look at the market as well. It's kind of like it's nothing, 5 points lower, 10 points up. So just middling around with no real directional move at all at this point. Cosmo First is down about 3.5% odd, 845. Panacea Biotech, which has had such a one-way move over the last 1 month or so, is down about 2.5%. So these are simply just pullbacks and profit booking that we're seeing. Policy Bazaar is another one which is down about 1.5% odd. And I think I mentioned CDSL, which is down about 2.5% odd as well at this point in time. One new addition on the upside is Castrol, if you want to look at it. 275 on Castrol now. And, there's been a constant bid for the Castrol whenever it's come off. The range on this one over the last 1.5 months has been about 230, 235 on the downside, and it's gone up to about where we are now, which is about 280-ish levels on Castrol. Ola Electric is the other one, which I think is making a bit of a comeback. So the low yesterday was about 118, and the high, the all-time high, of course, after listing was about 157, 118, and is back at about 131 right now. So a large amount of volume traded on Ola Electric as well.
Just one more stock, Gillette, which we highlighted earlier today, Prashant and Surabhi. In 2019, the stock was close to 8,000 rupees, and then everything went wrong, for them. So the stock currently is making a fresh 52-week high. The shaving trend has returned. In the middle, no one was shaving. The appliances segment has been firing for them as well. And the products that they have launched for women as well are improving. So that's why, there seems to be some kind of optimism out there. It was an 8,000 rupees stock in 2019. So if you look at that, then it's only at 9,000 rupees after nearly around 5 years. But in the recent past, in the last 1 year, the stock has doubled actually. So that's why it explains some kind of optimism coming in there.
Nigel, about 20 years ago, Warren Buffett was asked about Gillette. And his response was in his quirky humor. He said, men have one face, women have two legs. So that is Gillette for you. And it's just, it's a big, sort of over a period of time, over a long period of time, of course, it's a sort of a big wealth creator. I think used to be about 700, 800 rupees back in 2006 at about 9,000 rupees, 9,100 rupees at this point in time. But yeah, I mean, some of these businesses are looking good. Rana, just one quick point. So let's talk about what is ahead of us, right? Elections are, I think, going to be important. Some are saying, well, general elections hardly caused a speed bump. So why should state elections really matter? Maharashtra is an important state. I've seen some institutional brokers talk about how it's going to be a big one. It's going to either solidify the impression post the general elections or it can reverse it. Will it have a market impact one way or the other? Rana, what's your sense?
Sure. I think the state elections, that way there are not just Maharashtra and Delhi, there are many state elections in the next 2 to 3 years. For us, the significant one was the central election. Of course, not to say that state elections cannot impact the market on a day or a week or even a month basis. It certainly can, depending on the outcome. But since even before the election and after the election, our view has been that the government, in terms of their spending, they had done a lot on the industrial, manufacturing, and the corporate incentive side between 21 to 24. And that now going forward, the incremental spending, while the spend will continue, but the incremental spending will happen on the job creation, on the consumption, to boost consumption, or the welfare side. I think that view absolutely remains, irrespective of the election outcome. I think that is something that we are, quite, confident about. And this kind of ties into what I said in the beginning of this call, that we like that, the telecom and the consumer segments.
By the way, I just want to go back to NIIT. The stock is up again another 12%. We've been highlighting this. Something that is worth noting is that not only did Mr. Ramesh Damani sort of step into the company, check into the company with that 0.5% equity, promoters have infused money. They've increased their shareholding as well. The increase in the promoter shareholding is a little over 2%, 2.6% to be quite precise. And that seems to be bolstering a lot of confidence as well. The company is anyway guiding for, I think, 10% growth in the coming quarter as well. So the business has been looking fairly sound and solid. And then you have Mr. Damani putting in money, promoters putting in more money, and the market's absolutely loving the sight of that. The stock's done, look at 52% in just 14 days. Let's pull up a one-year chart. It'll give us an idea about the kind of surge that we've seen because of these recent actions. That's NIIT.
The other one is, you talk about Mr. Damani putting in money. Look, the other one is Protean, right?
Yeah.
Protean, again, a company that he invested in. Stock, I think, I'm not sure, we'll have to confirm, but I think at about 1,100 or so was where he came in. Stock's now almost double to about 2,050. But with Protean, it's essentially, and this is the thing with the market, with this wall of money which is coming in. The buzz around Protean is ONDC and, all the, of course, the budget also had some stuff in terms of mapping land holdings and how perhaps Protean could come in and a few other things as well. So a fair bit of excitement around all of this. But in terms of actual earnings, I think the company has seen earnings downgrades pretty much every quarter. You look at the last quarter results as well. I think, there were sharp earnings downgrades post the result. Profits themselves were down. And I think on a last 4-quarter CAGR basis, you're down about 20%, as far as Protean is concerned. But a lot of this some of these are, of course, futuristic business, and the bet is not every quarter or 2 quarters down the line, and you perhaps have to have a longer time horizon. But I think what is undisputable is the fact that markets are willing to have that longer term time frame or that view. Rana, I don't know if you have a view on some of these businesses or if you own any of them.
Well, I'll just say that on a top-down basis, whether it's the companies that you were showcasing. So these companies are they are creating new markets and or transferring market share. For example, this ONDC did not exist a few years back. Neither there were any institutional market in quick commerce, and a few years back there was no institutional market in even food delivery, or for that matter, online insurance broking. So these companies, through their capital or through their technology or through their position, what they have done, they have consolidated the market. They have become a platform for someone's the companies who started investing 3 or 4 years back. They're already a platform, so they are getting the cash flows. So I have no doubt in my mind, seeing those examples, many people would want to repeat that. Some of them will be successful, some of them will be not. For that, a bottom-up analysis of each company is to be done.
All right, Rana, we'll leave it there. Great conversation, and thank you for staying on a little longer than usual and sharing your views. So